Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for what is going to be another jam-packed daily cryptocurrency market update. And if you are new around here, we try and release an update just like this one every single day at 1 p.m. UK time to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets, and that's exactly what we're going to be doing in this video. My apologies for not releasing a daily market yesterday. We decided to take the day off. It's rare, but we did to kind of recharge and get ready for what is going to be an interesting week for the markets. And we're going to cover a variety of things in this video. We're going to be looking at Bitcoin technically. You guys will know, if you're up to date on this channel, that we are waiting for that right shoulder to form for Bitcoin. We did say it was likely going to be a shallow right shoulder. There's a number of things that we were looking at that essentially led us to believe that that right shoulder may already be in terms of the low of it. It's now just a case of going and actually taking the neckline, hopefully on momentum, and then we may be in a broader pattern to 150k. And we, of course, have derived our reasons for being bullish on Bitcoin, not just based on Bitcoin and its own technical merit, although, of course, that's a big part of it, but looking at the markets in a 360 kind of view, having an opinion on the dollar and where that's heading, the macroeconomic context, looking at other markets to see if there's any confluence in regards to us being right in the suggestion and the technical analysis that we have on Bitcoin. So we are going to be going over that. So there's going to be quite a lot of technicals involved in this. We'll be looking at Bitcoin. We'll be looking at the Dixie, which is strong, obviously, on the back end of non-farm payroll, and that's likely to continue. And then, of course, we'll look at actually some crypto stocks, which is rather interesting. And they all are pointing in an upward direction, which gives us kind of broader confluence in regards to Bitcoin. We could look at Bitcoin dominance, others dominance. You know, altcoins don't typically do well when Bitcoin's not, and altcoins seem, in my opinion, to want to gain dominance against Bitcoin. But we'll try and keep it as short and sweet as possible. I know the technical stuff can sometimes lose people. Where I want to start, though, however, is with Jerome Powell and his 60 minutes yesterday. So that was released, and I think that this was a lot more revealing than his post-rate decision FOMC statement, because he speaks about inflation, he speaks about the economy, and he speaks about forward guidance. And he said something that was very interesting to me, and that is that he's not going to wait until inflation is at 2% to lower rates. And the March rate cut, he did kind of, throw some water on that fire on Wednesday. However, I think you are going to get cuts this year. I think the markets are going to look forward to that, expect that. And there's been a kind of readjusting all around the time when Bitcoin ran into that resistance at, I think it was 48k, and neckline for the head and shoulders, on the back end of higher than expected inflation and a kind of readjustment in regards to forward guidance on rates. People were expecting 8 this year going into this year. It's now looking more like 3 or 4. So we'll get into it all. We're going to start with that clip of Jerome Powell, or a few clips with Jerome Powell, just really outlining the interesting things that he said in regards to where we're at. And then we'll dive into our technical assessment of the markets. So strap yourselves in, guys. Let's dive into it all.
Is inflation dead?
I wouldn't go quite so far as that. What I can say is that inflation has come down really over the past year and fairly sharply over the past 6 months. We're making good progress. The job is not done, and we're very much committed to making sure that we fully restore price stability for the benefit of the public.
Are you committed to getting all the way to 2.0 before you cut the rates?
No, that's not what we say at all. No. We're committed to returning inflation to 2% over time.
So I actually thought his 60 minutes was a lot more revealing than, again, the post-FOMC speech. And the interesting thing there that I took, not only do we see the data, whether you believe the US's data or not, is a whole different debate in questioning, can you even trust government statistics and bureaucracies, but that's for another video. But the interesting thing there, I think, to take away was that he's not going to wait until, and he's not committed to waiting until 2% to bring rates down, which kind of aligns with the broader macro thesis that we have of everything. I want to now just jump and play the last little thing from the 60 minutes, and that's him talking about what is arguably a very unsustainable path in regards to fiscal policy and the colossal debt burden that the United States and other fiat currencies now face. Remember, the currency systems, the fiat currency systems, are just IOU systems. Money gets borrowed into existence. When you increase the debt, you're essentially increasing the money supply. And ultimately, this is unsustainable and just insanity. And it's very interesting. And we did a video on Bitcoin's origins and why we were skeptical about it. I'm going to do a part 2 to that, so do stay tuned for that, where I'm going to be looking at the essentially Federal Reserve bill. But before that, it was the Aldrich bill, which didn't get passed because people were worried about Wall Street's involvement. And then they basically went on the opposition, and the same people got the same bill passed from Jekyll Island. They just did it in disguise, but they actually caused the 1907 panic that led into all that and the call for reform. So it's all engineered, and Bitcoin's miraculous rise and timing is something to be questioned. But let's dive into Jerome Powell talking about the colossal debt burdens we have and the worry that he has, and then we'll get into the technical analysis that we have for you.
How do you assess the national debt?
We mostly try very hard not to comment on fiscal policy and instruct Congress on how to do their job when actually they have oversight over us.
But is the national debt a danger to the economy, in your view?
In the long run, the U.S. is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path.
I thought that was all rather interesting. And let's just talk a little bit about inflation now. If we take a look at where true inflation has inflation, you can see that today's CPI data by true inflation, it's not really the CPI because the CPI is a totally different basket, is coming in at 1.41%, which is well below the Fed's target. We also have, again, you can see the rise in inflation kind of coincided, the macro headwind that was brought on by that, and thus the dollar strength and the resistance for risk, already, which was all technically signaled, by the way, all perfectly happened when we had that slightly higher inflation print. I think you're going to get a lower one. I think the markets are going to enjoy this. This is, of course, coming on the 13th. Other quick interesting news about China. So China's stock market is in real trouble, and now Chinese academics are basically calling for a $1.4 trillion plan in regards to rescuing that. So we'll see if that comes to fruition. Let's now dive into the sort of technicals to give us a guide of where we are and where we're heading. You guys that follow me daily will know the plan that we have set in place. We're looking for this right shoulder to form for Bitcoin. Remember, we were one of the few people to call and to identify this head and shoulders, giving us a 42K target. And ultimately, we did say whether this needs a deeper right shoulder or not is going to center around the dollar. However, the dollar, our broader thesis for the dollar, which is backed up by rates, yields. I did a massive Patreon on everything yesterday where we really outlined why we're bullish on the markets. And we brought everything into it: gold, stocks, yields. We are, I believe, are one of the very few channels to sort of understand the broader picture on things and thus derive a view from that. Which gives us, I think, an advantage over most other market participants. But our broader thesis on the dollar is that it comes down here. Remember, this is backed up by rates. And of course, we know that the back end of that is risk was typically going to do well. And we also have technical merit like what we're looking at on Bitcoin with stocks and things like that to also support it, and gold. And the yields are also a predictor of this. But the dollar has been rather strong. And the dollar and Bitcoin, despite the strength we've seen for the dollar, obviously, you had non-farm here. We do think this is an inverse head and shoulders, and you may want to work your way up to this target. Despite that, though, Bitcoin is doing a very similar thing, and its sort of inverse head and shoulders is all centering around our target that we had going into this year in 2023 of our. I'll zoom out the charts so you can see this. So you can see Bitcoin's net sort of small head and shoulders, like what the dollar is doing, is centering around a target, which is a very key level of significance for us. And ultimately, this is going to project we'll just very quickly do it. Are we on log? I think we are. So we're going to take it off log. Around about 45,000. And I think that that's going to happen. I think this is going to close the gap and ultimately lead us a little bit closer to the right shoulder. People that don't believe in these patterns, well, look at how right we've been on calling these patterns. Chainlink is another example of ours. You can see this is doing exactly what we set out. Chainlink's kind of a little bit further ahead than where Bitcoin is. A shallower right shoulder like where Bitcoin is, ultimately going to lead to a similar thing. And we're not just bullish. So the dollar headwinds, I think, do subside. We do think the dollar's on a broader trajectory to the downside, but being strong, but crypto's doing quite well as a result of this. We weren't just looking at the right shoulder potentially being in based on Bitcoin against the dollar chart. We were also looking at it being in based on Bitcoin against and it's playing out, SPY, also in a similar pattern, NASDAQ, and gold. And actually, we've got more confluence to be bullish on the market in regards to where Coinbase is. We did say it was going to bounce here. Our first target for Coinbase has been hit. We were accumulating at the $30, $40 range. We think Coinbase is going to $436. You've also got the likes of Mara, which is a mining stock doing something very similar to what it previously did. We've also got the likes of MicroStrategy, very much following the plan that we set out for it, and even Grayscale Digital Large Cap Fund. So these are just a few external to perhaps to the crypto space, but relative because they're crypto kind of stocks. reasons to be bullish. If these are pointing to upside, that doesn't indicate a downside market. Also, Bitcoin dominance things in a row, others, and the broader basket of things and the correlation that we look at is all aligning. So it's just a case of waiting for this right shoulder to play out. I think Bitcoin's going to 150K. Could be in 2024, could be early 2025. And we don't see a crash coming until we do. Until we start to see market participants exit in volume, then we keep on keeping on. So I guess that's really all I've got for you guys. Again, apologies for no daily market update yesterday, but we are back, hopefully with a bang. And make sure you go and check that subscribe button out, guys, because we'll be keeping up to date day in, day out on all of this and keeping people's heads level, I guess, in what can be a rather volatile space. That's all I've got for you guys. Thanks a lot for watching. See you in the next one.